Hey, and welcome to Payments Cannot Fail. I'm your host, Mark Fieldhouse. I'm very excited today to welcome our guest speaker, Paul Horlock, who is Chief Payments Officer at Santander. Welcome, Paul.
Thank you.
We've got an incredible list of questions I want to go through, but we focused the last few episodes really looking at technology, infrastructure, resilience, all those typical things that providers and banks typically look at. But what I'm going to do today with you, if that's all right, Paul, we'll shift our attention now to the sort of banks, the schemes, and how the country and the world perceives it, and how customers also interact with those services as well. Paul, just for some of the background, led Pay UK and then has moved to Santander to run payments globally for them. So where I'd like to start, Paul, if we look at the theme of the future in motion and seeing things from both sides, how differently have you viewed payments transformation inside a bank versus Pay UK? I think that's probably a good place to start.
A great place to start. I'll just start on, if only I ran it globally. I look after the UK, but I'm involved in the global domain. And that's an interesting point to pick up on, because your point around differences between scheme and company, we're always looking at scale, we're always looking at economy of scale. Particularly in Santander, we're building a global platform to give us the ability to drive global benefit for investment in platforms and then get benefit for local control and channel delivery. But the similarity between the scheme and the bank is it always follows the money, right? So whatever you need to do, there has to be a business case, there has to be funding. And I would say the experience of trying to develop the funding lines in Pay UK has prepared me well for the conversations in Santander for trying to find the funding lines. And I think that was one of the challenges of Pay. When we started Pay UK in 2017, really we were picking up a number of schemes which were running, what some would say hand to mouth. They were running on calls, industry calls. Every 6 months they'd ask the industry for money to do the next thing.
Sure.
There wasn't an ongoing funding line. It wasn't running as a business. So what we had to do was to create a position where we met the IOSCO principles, we looked like a solid going concern, and we built enough financial stability to say how we could drive this business forward. So we moved to a per-click charging mechanism. We started to create a real commercial view of how we ran Pay UK, which got us the conversation with our customers, and our customers were also our well, I wouldn't say shareholders, because we had guarantors across Pay UK. But that group of users were where we needed to go for funding, and we built a commercial conversation with them. Now, interestingly, within Santander, we've had to do a similar thing. When I joined 5 years or so ago, payments is always that area that no one wants to talk to you when it's going well. They only want to talk to you when it goes wrong. And I think a lot of commercial banks, retail banks, are in a position where it can go wrong because it doesn't get the investment it needs. Yeah. So there is a real need to take that view of building payments as a business, understanding what the income line looks like, what the value looks like, and then working with the Santander UK group and then the group across Santander as a global entity to distribute it and get the benefit on a global scale to drive the investment.
Yeah, I think this is where a lot of the conversation stems from, certainly in this podcast and discussions, in that theme of just payments cannot fail today and ever, but the focus is shifting. What surprised you most moving back into banking? One thing or multiple?
Yeah, you mentioned my time at Pay UK. I've been with Nationwide before that. I've been with Barclays before that. So some things are not a surprise. When you come back in and you realise the things you need to have done, you haven't necessarily done.
Okay.
You're relying on a few key experts that understand how the institution works. I guess what surprised me in particular was, as a global institution, I don't think Santander had leveraged its global capability. So I remember being at Barclays, we're at the centre of the group, and you tended to find a way to make sure we ran payments through Pool in Dorset, sounds a bit odd, but every payment in the world went through clearing through a global system. When you got to Santander, actually everything was disaggregated. It was kind of federalised, right? And particularly in the UK had got quite tied up in ring fencing and had separated itself to a degree.
So everything ran independently?
Yeah, so we had our own systems, we had our capabilities. Yeah. Now, there were services we took from group, but not really the ones that you could get real value from. And I think the last 5 years has been a journey to say, how do we take this thing called Payment Hub, which we designed in the UK, We sold that to Group, and now Group are rolling Payment Hub out across every country in the group.
So set the standard once.
So it's set the standard.
That's great.
We now take a central service. So we're taking a per click cost, which in theory is shared across all those countries. Now, over time, we'll see the benefit of that. But it means that that service provided by, as was PagoNext, now GetNet platforms, is committed to making sure it's mandatory. Compliance is assured every year. It meets all the regulation expectations. We've had to do that individually by country until now. Now, if you put that centrally and we run the standards and we run the capabilities at scale, it means I can focus on providing services to customers that are really focused on channels and making sure our local controls meet those expectations as well.
Yeah, because ultimately the customer is who we serve. Whether it's our business, your business. So I'm always intrigued by the customer's perception, particularly of the real-time world that we operate in, and payments is no different. Have you found that a customer's perception has fundamentally changed of what they expect? Because you can get everything instantly. Is that the same in your world as well?
Yeah, I'd say so. I mean, you've got to remember in the UK we've had faster payments since 2008. So customers' expectations have been set for quite some time. So we did some customer research about 18 months ago, and we asked them what they wanted from payments, what they wanted different. And actually, no one's really asking for change. Right. Interestingly, when we looked at it, it was really 1 in 5 customers are the ones that want change, and the only reason they want change is because they've either been defrauded or the payment's been delayed because we thought they were being defrauded. Okay. So that there's this underlying concern around security, safety, not about is it quick enough, not about do the banks know what they're doing in terms of getting it to the right place with the right functionality.
Security.
It's always been there, but unfortunately APP and the digital world we live in and what goes on within the technological services which provide you gateways into banking have created so many other attack vectors. I've left those customers with concerns. Now I think we can do lots of work at the back end to make sure it's safe, but we have to work with the telcos, we have to work with the large technology companies to make sure we start to assure that front-end capability, because as far as the customer's concerned, it's an end-to-end experience. It's not just what the bank does.
Agreed. And we're not going to focus on it today, but certainly the evolution of frontier AI and all the other threats on the global landscape is changing that considerably. Do customers take things for granted, do you think, now that 10 years ago or even 15 years ago were just unthinkable? Do you think it's just an expectation? Or?
Yeah, I think it is. That they when we talk to them, actually, there's a huge amount of trust in high street banks because that's been solid for quite some time. People. I think we always overestimate short term, underestimate the long term, because we make changes and think customers are going to jump onto it straight away. They don't. Right? It takes often generational cycles to get to new ways of doing things. Contactless has been out there. Well, I think I had a card in my wallet since about 2007, 2008. It probably took 5 years to really start using it because of the TFL moment, but it's become a matter of course. It's just a standard thing now. The same with faster payments. Now, open banking will be like that in a decade's time. Things that we're releasing now in CVRP will be like that in a decade's time. And I think people just take it as take it for granted as a standard delivery. And on that basis, we have to make sure they're safe, because people just expect that that's table stakes in terms of level of delivery.
And do you think those levels of expectations are set by the trends that the banks put in place, or is it the life that you and I both lead using digital devices every day? Is it just set by external influence?
I think there's so many influences. You're right. And just because we launched a contactless card doesn't mean we're in charge of that whole kind of technology. There are things that customers can do every day in social media or on other in their lives of shopping and commerce that we have to live up to.
And they just expect it to match.
Absolutely, And I think that's where we've got to catch up some of that. And the work that we're doing, for example, on tokenized deposits, I think starts to allow us to create a new version of money which starts to meet some of those more digital expectations that we can't do with old money.
And I'm always keen on, and it might be a bit of an unfair question, but it's like riding a bike and changing the chain and the wheels at the same time. Building while running the present, or building for the future and running the present. Can you tell me what the biggest challenge is about modernizing payment infrastructure? Because ultimately you're having to run at huge scale and volume and then change for the future.
It's legacy.
Right.
You know, the fact that we've got ingrained decades of processes and procedures and technology. And we, you know, we're going through a big process at the moment. It's very well known. We're in the process of acquisition of TSB. We're through changing control. We're now working through the detailed plans to take us through Part 7. When you start to do the detailed requirements, you realise there are things in both institutions that should be exactly the same, but they're not.
So you uncover things as you...
So you dig out things and you find out in the requirements, actually, we can't just pick that up and move it because we're going to lose data or we're going to lose customers on the way through. We've got to find a way of cleaning that up. Now, that's just getting us to where we are today. That's not necessarily taking us forward. So, yeah, your point around refueling while flying, you're replacing engines and rewiring the thing at the same time. Yeah, and you can't miss a beat. You know, from a payments perspective, the title of the podcast is absolutely right. They can't fail.
Yeah.
And it's funny, I said this to my wife last night. I said, I'm doing this payments can't fail podcast. She said, well, they will, won't they? I said, well, you're probably right. That sometimes these things go wrong, but they can't fail. But we've got to be great at recovery. Yeah. And you're only great at recovery if you understand how the damn thing's working. Yeah. If you're really clear what's driving all of those processes,
where failure is.
Yeah, what your ability to recover is built on your ability to understand how to deliver that service in a detailed level.
So get to status quo is obviously the key. What separates genuine modernization from just kind of bolting something on the edge of a service and calling that a modern service? Yeah,
I think it is that the National Payments Vision talks about next generation technology. I think we've been very good at bolting things onto old technology, but it creates an overhead in itself in managing. I think the way what separates it is trying to take that leap into creating real efficiency and agency for customers and value for this relationship. You know, it should be a value relationship between customers and institutions.
Yeah, of course.
And often we do things because we're just trying to catch up with the market, but it doesn't necessarily have the right business outcomes behind it. So you know, I remember being at Cybos, blimey, must be about 12 years ago, and I think it was the Cybos. Everybody talked about blockchain, and it's like it was a solution looking for a problem, and no one quite knew what to do with it. And we knew at some point we'd find some of those answers. Now we're doing it in the conversations around tokenized deposits, stable coins, CBDCs. I think at last we're beginning to find that jump into a way that brings services to customers that's really makes a difference, rather than just saying we're using it because it's there.
And is it always a technical issue? And if you fix technology, is that the hardest part, or is it the operating model and support?
It's funny, isn't it? Because I don't think we should just chase technology. I think what's the difference here is we have thought about the utility for customers. What do customers really need from new forms of money? You heard Sarah Beaton talk about a multi-money future, and a lot of people are trying to get their heads around what that means. But the ability to give customers the power in their hands to live their lives in a way that's more empowering and fulfilling for them is really the answer. Now, how do we do that? Well, today, if I give you a £5 note, it's a £5 note. I've transferred value. We can see it. I can touch it. If I'm buying something today on, I'll say at Facebook Marketplace, I send the money one way, but I move the transaction the other. In effect, you know, and I've seen people sending money blindly, then going to pick up what they bought and it doesn't exist. Well, the money's gone, right? So how do we bring smart money? How do we bring kind of back to the future? How do we put money at the point of the transaction? Well, that's where if we move to a tokenized future that allows us to put money at the point of the transaction,
of course,
we actually have changed the way customers then interact with each other and interact with the trade that they're trying to make. And that's exactly the use case that we've got number one in the GBTD program, to try and go through moving the marketplace payment from a send and hope to an actual value exchange that both people can sign off to through a smart contract.
And just for the listeners,
GBTD is, well, so it sounds very old-fashioned, Great British Tokenized Deposits.
Okay, got it.
But we use GB because it fits with the currency code of GBP. And Tokenized Deposits for us is taking the ability to move commercial bank money into a tokenized world.
Got it.
Now, this is initially a reaction to the conversation on CBDC. Because as a bank, we're not hugely keen on customers moving their money back to the central bank to do a lot of this stuff. We'd love to do it in commercial bank money. We think it's better for the market, better for customers. So GBTD is a way of saying, how do we bring some of that utility to customers? And we've been pursuing 3 use cases. One is marketplace payments, one is remortgaging and one is wholesale. That goes to full pilot later in the summer with a view to us trying to go to production next year as a consortium. And clearly we've been talking to the Bank of England about this all the way through. Real encouragement to bring new forms of money to market. And I think it's been a real partnership conversation with the governor and his team there to understand how we retain the singleness of money but bring new capability to customers. Now that's not the technology that's driven that, it's the conversation that says what's the needs that what's the evolution of customer need that we can apply technology to.
And I'm always interested how you balance innovation and resilience, which is such a core part of everything that you've talked about, Paul. How do banks and institutions balance the need and actually the requirement from customers to continually innovate versus the resilience that excuse me, is expected anyway?
It's funny, I was talking to someone about this last week because I've been doing this for too long. Right? It's one of the challenges. So if I look back at my Barclays days, we had separate LPARs for our payments capability. So if anybody wants to look that one up, they
logical
can.
Partitions, if I recall.
And it often meant if things went down around us, we kept running. There was nothing going to stop that payments capability moving. Now, a lot of institutions moved to a far more integrated server farm approach, microservices, et cetera, What that tends to do, though, is if you get issues in one area, you tend to pollute other parts of the institution, and you get a loss in the online bank, which then affects us somewhere else, and we've got a whole bunch of challenges. I think there's great benefits and more flexibility into the way we've moved, but some of the integration has created its own issues. We have to build resilience by design, and that means taking away from single points of failure, giving us multiple forms of routing, if you like, in terms of customer transactions. I used to run call centres in dim, distant past, and we always tried to find best call routing. We always tried to find the best way for customers to get their answer, both from a speed but also a cost perspective. I think we have to be a bit more open to how do we get more distributed in the way that we manage payments. Now, great examples of what the Form3 does around providing gateways. Gateways, to me, are not just a gateway to the scheme, they're an orchestration capability. And if we think about the future in a more distributed sense, and we create multiple gateways to create a more open orchestration capability, if you like, to then connect with settlement capability, also connect with input. Actually, if one of them goes down, you've immediately got more redundancy built in. You can move to other routes. You can give customers other choices. So the ability to make a tokenized deposit payment, or you might want to make a faster payment, or you might want to go old school and set up you've got a number of different choices to do something. What we tended to do is try to think efficiency around singularity is probably the answer, but what it hasn't done is necessarily built that resilience by design to give us the redundancy we need across customer choices and routes to market. And I think the future, that's where we've got real opportunity to do that now that we've got more
from sort of ground
issues.
up. And how do you balance that regulation in the background versus innovation? Are they at
not wonderfully
well, or are they?
Well, I mean, anybody that runs a payment shop in a bank will tell you the way you get money is you say that's regulatory and mandatory. And it's true. And when times get tight and you're in a globally complicated situation as we are today, the geopolitics are not helping any of us, you tend to strip back to regulatory activity. The challenge for us is how do we do regulatory work but in a strategic way? So if we need to meet a regulation, I'm not saying that in any way we would gold plate it, but we need to do it in a way that gives us a future-proofed delivery, not just deliver it on old tech because that's the simplest way of doing it and find out we immediately have an obsolescence issue and we can't patch it.
It's very short-lived.
We're vulnerable. We've got to be thinking, how do we go forward? And we've all been grappling with the SWIFT changes and the RTGS changes. Our route to market for that actually was to use the new payment hub in Santander because it is ISO 2822 native. Now we could have done just some old, and we have done a bit of tactical work on translations and sort of short-term tactical capability, but the strategic route is to leverage that payment hub because we get the ISO 2822 flow, and it allows us to meet the strategic requirements of SWIFT and of CHAPS. So that, to me, is regulatory mandatory, but we've taken the benefit of what the group is doing to do it in a far more, to get more bang for our buck, better investment return on that over the longer term.
So I'm going to throw three words at you: build, buy, or partner. How do you balance that? We've got great innovation in our own bank versus this other company, a software vendor, looks incredibly good, or we should partner and develop something together. How do you get the balance right between that?
Yeah, well, I could probably answer it two ways. One from the centre, from the scheme perspective, one from the institution. Now, Santander's got quite a history of build, right? I think if you talk to the senior management in the group, they see us as very much as an IT company as much as a bank. So we are building, and we have built our own global payments platform. We're building our own global cards platform, but we do partner as well. So we're live in the UK in a partnership with Token, because they could bring an API hub to us that we just could never have brought to market at the same speed. We couldn't have been as flexible, and for a good value case, we've brought functionality to customers around pay your credit card through our app, and we're now doing QR codes for P2P payments. Things that if we tried to build that ourselves, I think we would have spent another couple of years and a lot of money.
So speed to market is a key thing.
Doing something that's quite niche that Token will be able to do. Whereas the big engineering stuff, the bank has bet itself to be the right answer to the question. So I think it's always a mix, and you have to go through the business case and you have to understand where you go. I think it's different for each bank, and Santander has spent a lot of time building a global engineering capability, and because of our globality, for example, the global cards platform is being built in Sao Paulo. I mean, there's literally an aircraft hangar full of people in Sao Paulo building that thing, and because of the experience the group has in that functionality, actually the view was it's makes sense for us to do that ourselves, and we'll build it ourselves and deliver it.
Does that give you, is it a competitive advantage, do you
I think it can give you a competitive advantage, because you can drive forward where you've got commercial opportunity, and you can bring changes and capabilities to market faster if you've got control.
And then I think it's an interesting segue, because when we look at the global landscape, do you think that clients continually expect consumer grade, so corporate clients in this case, do they expect consumer grade experiences? So as you're looking at building, buying, partnering, does your corporate business case become any different to your end customer business case?
I think the history probably hasn't been. Increasingly so it is expected. I've been out to meet a few of our larger corporate customers, and their expectations are growing rapidly. They do business more and more globally. They need solutions that meet their day-to-day needs, and they're not prepared to accept it's going to take a couple of days to work that out, right? They can make a payment instantly on their phone. Why on earth is the supplier payment they're trying to deal with here stuck somewhere, and they need that same delivery? We're growing our commercial bank right now, and it is one of those challenges we're facing in terms of how do we bring those functions more effectively to that group. Now, we've done a bit of that with this Navigator product we bought. We've tried to stitch together a number of different things that customers would need to build a global capability. But I think we've got to go much further in terms of how we create that functionality for them.
And what's next? Real-time payments, where do you see this landscape evolving over the next year, 3 years, 5 years?
Yeah, look, I think the UK clearly has its long-going challenge of moving from faster payments to the promised land of what we see as the next level of instant payment. Now, interestingly, what we have with faster payments works very well for many things that customers need today, and you'll see some of the tests that are going on around account-to-account point of sale today, which leverage what we have with faster payments. I think there is a need for us to go the next step to make sure we can make them real instant. If we want something that commercially competes alongside the card market, we've got to be able to create the same customer outcomes and experience, but also the same delivery for merchants within that process. And we've got a few things we're having to try and work our way around at the moment. So we do need to press on with what the MPV talks about in terms of the next generation infrastructure for FP, but that's not necessarily that we should just buy a big new box. I think we've got to be thinking really carefully about what's the blend of things that customers will want to do in the future. What do they really need instant payments on a current sort of faster payments view for? But where does tokenized deposits fit in? Where will they maybe start to use stable coins on a cross-border remittance type basis that actually it's the right thing for them? We've got to stop blending that together, which means the work that the Design Authority is doing for our PIB has to be thinking about that whole case in terms of the ecosystem and the blueprint, not just about a singular delivery of account to account point of sale.
And AI, I can't have any conversation at the moment without that creeping into the conversation. Does it have a place, and where do you think AI will weave itself into the world of payments?
It definitely does. I was at a book launch last night, Alan Watkins' book,
Okay.
Smarter Than You, and I think he's probably right. Look, we are, I mean, as a firm, I think we've got lots of catching up to do, and we're working hard at it. You see the Lloyd's announcement yesterday about their AI within their fraud capability. I think we're all seeing definite advantages around fraud and fin crime. That's probably the entry point for many of us. The work that we have been doing on data analysis can be massively accelerated through that process and start to get much smarter and much better at what we do. But I think in terms of serving customers, there's so many advantages and opportunities. The one that's worrying me is agentic commerce at the moment. And we've got another session with the schemes, I think, in a couple of weeks' time on how that's developing. It's where the liability lies, and this is where
this is agents making payments.
Yeah, this is where I'm a bit kind of old school, right? Because every contract I write with a supplier, or everything we go through with the regulators, is trying to understand where liability sits.
That's a good point.
And where the controls are. And if you've got customers who are using agents to make purchases, and increasingly putting their power in the hand of an unknown agent, who's accountable if the wrong thing is bought, or if never arrives, or they buy 10 of them, you only buy one of them, and that might sound minor, but this starts to move into millions of pounds of purchases that we tend to have issues around disputes and repatriation with. And if you look at the issues we have with APP and the fact that banks are left with a huge liability at the moment for customers' actions, who's going to get liability for agents' actions?
And is that where some of the hesitations
I think
in?
Definitely, and I think we've got to get clear where the control and ownership sits. And if you look at the conversation that David Postings raised a couple of years ago around moral hazard from a customer perspective in terms of the choices they're making to undertake certain purchases, that the worry I have is that there's already a regulatory shift in a way that provides customers far more latitude with taking care of their own position. If you then move into a multi-agent kind of chain in terms of purchase, where's responsibility sit? Where's the moral hazard gone, and what happens if it goes wrong? And that might start in a small purchase journey. I think we've just done a test on this in South America around agentic commerce. I think you could buy a pen or a packet of sweets or something. Okay. But you start buying cars, you start buying whatever, and people. And the story I always tell everybody is, I had a guy arrive at my door last year, knocked on the door and said, "Do you know your neighbour?" And cut long story short, the neighbour that he showed me was not my neighbour. And he said, "Well, clearly he doesn't have a van for sale." Then I said, "No." So this guy had spent 17 grand on a camper van
that didn't
exist. And I said, "Well, that's terrible. You're out." He said, "Don't worry, my bank's going to pay me back." And you think, so you've made that decision yourself. You've had no real due diligence on that. But and the danger is we might find a tech service which presents you with, "Don't worry, we'll do the diligence for you through agentic commerce." It just worries me where that could go.
So fold all of this together. If you were to build and start again, would it look the same? Would it? I know that's a hypothetical magic wand sort of thing, but would it look the same as a bank now? Would you build something completely different? How do you think it would compare?
Fantastic. I don't think I've ever had that internal.
I call that my magic wand.
That internal conversation. Look, I don't think we'd start from where we are today. I don't think but we're here because of evolution. And you can't buck that. And if you think, I had people work for me at Barclays who had been in the original BACS design back in the 60s, and we're only here because of the advances that were made at that point, and the fact that we just put all the stuff on tape every night and truck it around, and bike it around the country. So I think we could learn a lot from that if you're going to start again. I think what is interesting when you talk to, and you go back to your key point of resilience, the dangers that we've had is we've built ourselves points of failure. because we tend to go monoline on certain deliveries, and we tend to be, that we get a question from the regulators to an answer for that, so we build an answer for that. You get a question here, so we build an answer for that. What we haven't necessarily done is built a landscape that is more interactive and orchestrated with each other, so that customers can be more fluid about how they move from one thing to the next. And this ability to, I think omni-channel was the phrase of 2 or 3 years ago. It is kind of an omni-channel payment situation we should be in, and we haven't built that, because if you've got a direct debit, you've got a direct debit. Now, you don't really care it's direct debit. You're just paying a bill.
Yeah.
We really need to make sure that bill gets paid on the best way for you, and that might be it's just a push payment. It might be that we tokenize it somewhere. It might be actually, God forbid, we might ask you to write a check for it. But what we've done is we've thrown every demand down a certain line, and we don't connect those dots.
And the customer shouldn't really have to care, right? They should just know that
they just want to make a payment.
Yeah.
They don't want to make a CHAPS payment. They don't want to make a card payment. They just want to buy something. And I think if we're going to start again, we've got to think about right back to that point of saying, so what is the customer wanting to achieve, and what's the best way we can do that for them? Not how do we apply the product we've got today or had 20 years ago to just deal with the easiest way for us to do business.
And a very tough question, I think. In 5 years' time, is there one thing that you think will change the landscape completely?
Yeah. I think tokenized deposits, or tokenization. Tokenization in cards was a massive breakthrough in the way that we do business from a card perspective. I think you're seeing now the growth. Admittedly, US dollar is dominating the market in stablecoin, but you're seeing real utility in taking money off the traditional rails into that tokenized space, backing those tokens in a different way and creating different ways for customers to do business. And on the cross-border side, stablecoins clearly has a massive opportunity. I think from a retail, wholesale, domestic perspective, there are really big opportunities for customers in terms of the control and the security we can bring for them around the conditionality and smart contracts that we can apply to payments, which we can't do in an analog sense. And I think that's closer than we think. Again, as I said earlier, we overestimate short term, underestimate the long term. I think a few of us will get excited about what we can do today, but I do think the 5 to 10 year route, that's going to be one of those things that's going to have a whole new foothold in the market, and that's what we're all trying to talk to our excos and boards about at the moment to explain the different shape of what payments will look like in 5 to 10 years' time.
It's exciting, right? I mean,
absolutely.
We said when we first walked in, actually, Paul, we could go on for probably 3 or 4 hours in this conversation. I have enjoyed this immensely. Thank you so much for taking us through your insights and some of your background. So firstly, on behalf of the podcast and Payments Cannot Fail, thank you, Paul, for joining us. And it was great to look at what we've considered is the future in motion. So thank you.
Well, thank you for inviting me. Really enjoyed it.
You're welcome.
Thank you.